Assalamu alaikum wa rahmatullahi wa barakatuh. In continuation of our lecture on final accounts, today we are going to be looking at terminologies in trading accounts. To start with, the first one is sales. Sales represents the total cash and credit sales during the period it is credited. During the period, it is credited to the trading account. Sales is the total amount of goods sold by a business organization. It includes the credit sales and the cash sales, and it is credited to the trading account. Return inwards. Return inwards is the total value of goods returned to the seller by the customer out of the goods previously sold to them. It is also known as sales returns and must be deducted from the total sales. Return inward are the part of the goods sold that the customers return to the business. Turnover. Turnover is the total net sales during a period of time. It means sales less return inwards. So when we are talking about turnover, we are talking about net sales. That is the total sales of the business minus the return inwards. Purchases represent the total of the cash and credit purchases of goods for resales. It represents the total of the cash and credit purchases of goods for resale. When you are talking about purchases, we are talking about the goods bought by the business to be resold, and it include both cash and credit purchases. Return outwards. This is the total value of goods returned to suppliers out of the goods bought. It is also known as purchases returns. That is the goods that the business returned to the suppliers out of the goods that were bought from the suppliers or out of the goods supplied. Carriage inward. This is the cost of transportation charged on goods purchased. It must be added to the goods purchased. Carriage inwards. This is the cost of transportation charged on goods purchased. It must be added to the goods purchased. It increases the cost of goods purchased, hence debited to trading accounts. What we are saying here is that the cost of transportation of goods from the market, goods purchased by the business from the supplier to the business premises, is what we refer to as a carriage inward, and it is to be added to the cost of goods purchased to the purchases, and it is debited to trading accounts. Carriage inward. Carriage outwards. This is the cost of transportation charged on goods sold to customers. It is a selling expense and is debited to profit and loss account. Carriage outward is the amount spent by the business on goods sold to customers for transportation on goods sold to customers, and it is classified as an expense and it is to be debited to profit and loss account, not trading account. Cost of goods sold. This is the total cost of goods sold by the organization. It is derived by adding opening stock to the net purchases less closing stock. By adding opening stock to net purchases less closing stock. Cost of goods available for sale. Cost of goods available for sale is the addition of opening stock and net purchases. Stock of goods. Stock of goods in business transaction is divided into two. When we are talking about trading account or in account, it is divided into two. When preparing final account, the stock of goods are of two types. We have the opening stock and the closing stock. The opening stock, this represents goods available in a business at the beginning of the trading period. Opening stock. This represents goods available in a business at the beginning of the trading period. What this means is that the closing stock of the last period will now become the opening stock for this new period. Closing stock. This is the stock of goods unsold at the end of the trading period. The cost of goods unsold at the end of the closing period. So at the end of the trading period. So at the end of the business activities for the period, the remaining stocks in store will be classified as the closing stock of the business for that period. Gross profit. Gross profit. This is the excess of sales revenue over the cost of goods sold. That is, when you deduct the cost of goods sold from your net sales, then you realize gross profit. Gross loss. Gross loss. This is the excess of cost of goods sold over the sales revenue. That is, when your cost of goods sold is higher than the sales revenue, you arrive at the gross loss. Now, having basically discussed all the items in the trading account, let's look at an illustration to support all that we have been discussed so far. Illustration 1. From the following transactions, prepare trading account of Delighted Gardens Enterprises for the year ended 31st December 2017. We have stock at close 5,000 naira, sales 50,000 naira, purchases 30,000 naira, carriage inward 1,500, return inward 1,000 naira, return outward 2,500 naira, and opening stock of 10,000 naira. Solution. Using conventional method or T method. Our denomination is naira. So opening stock on the second column with naira. You had purchases 30,000 naira. Plus add carriage inward 1,500 naira. That gives you 31,500 naira. Then you less return outward. So the balance is 29,000. By adding that 29,000 to opening stock, you have 39,000, which is referred to as cost of goods available for sales. Cost of goods available for sales. From that cost of goods available for sales, less closing stock of 5,000 naira. Then you have cost of goods sold of 34,000. Now, move to the credit side. You have sales of 50,000 naira, less return inward. By deducting return inward from sales, you have 49,000, which is our net sales. So from this 49,000, deduct cost of goods sold 34,000 naira from it, you arrive at 15,000 naira gross profit. So you have the total of 49,000 on both sides. On the other hand, let's look at how to prepare trading accounts using the vertical format from our illustration. The question again. From the question, we have Delighted Garden as our business name. Trading account for the year ended 31st December 2016. Our sales 50,000. Let's return inward. We arrive at 49,000. We arrive at 49,000. On the other line, we have cost of goods sold. To start with, opening stock 10,000 naira. Hard purchases 30,000, giving us 40,000. Hard carriage inward 1,500 naira. That gave us 41,000 naira. Let's return outward 2,500. Then we have cost of goods available for sales of 39,000. From that cost of goods available for sales of 39,000, less the closing stock of 5,000. So we have 34,000 naira as cost of goods sold. Deduct 34,000 naira from the net sales of 49,000 naira. We arrive at the gross profit of 15,000 naira. So that's the illustration on how to prepare the trading account using the conventional method or T method and the vertical method. Assalamu alaikum wa rahmatullahi wa barakatuh.